This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of October 16th through the 20th, 2023. A very volatile week. A lot of Fed goons speaking during the week, some data, but a lot of geopolitics in play. So we had to really pay attention as we went through the week. As we began the week back on Monday the 16th, one of the charts we discussed was one that we were sure to cover last week in our podcast highlights, and that's a daily chart of the front month December silver contract. There's clearly a trend here. If silver gets above its 50-day moving average, it moves up to the trend line that dates back to May the 5th. So we're watching that 50-day, and we'd certainly be revisiting this by the end of the week. Back on Monday, we couldn't be certain we were going to get through there, though, but we wanted everybody to keep an eye on it. Here's part of that discussion from Monday the 16th. Silver. Okay, we've been talking about this, right? Silver's still a long way from its trend line. The first thing it's got to do is get above its 50-day. Today high 22.89, so still not even close. Still 20 cents, 30 cents below the 50-day. But back in July, once it got above 50-day, it went to the trend line. Back in August, once it got above the 50-day, it went to the trend line. So you get above 23 first, and then get above the 50-day, then there's no reason to think that over the next 6 or 7 days, like what we saw in July and August, that we wouldn't get back to the trend line. That's tradable, right? Because by the time we get there, that trend line will be, what, 24 and a quarter? That's a whole dollar from the 50-day to the trend line. That's something tradable. Along with the precious metals, the mining shares have been trending higher as well. In fact, their chart, at least by the direction of the GDX, the big gold mining ETF, their chart looks a little better than gold and silver. And maybe the miners are leading the way. And so on Tuesday the 17th, we took maybe hold some clues for where the metals head from here. Finally, again, the best chart of the day is GDX. It's broken above its downtrend line. It's above its 50-day. We went through all that yesterday. Another green candle today. Take out the red one from last Thursday. And 1, 2, 3, 4, 5, 6, 7, 8. 8 out of 9 days have been green candles. Not too shabby. Notice the action at the low. I put them in circles. This kind of 4-day gap down, move back up, gap up in early March. 5-day gap down, move back up, gap up in early October. A lot of similarities here, just like in that silver chart. Key level, clearly, as I keep telling you, is 30. Got to make a higher high versus late August and mid-September, but also you can clearly see I put a purple line on here. 30 is either support or resist. We get above 30 and hold there. Close there and hold there. Well, then we're talking 33, maybe even 36 again. And wouldn't we all have bigger smiles on our faces on a daily basis at 36? As we always say, if you're going to track the gold market, you got to track basically everything. Geopolitics, politics, monetary policy. The list seems endless. We got to keep a track on the stonk market as well, because that's the one thing that seems to always put the fear of God in Powell and the rest. If stonks start heading south, you're probably close to some type of pivot and pause. And stonks are heading south after looking like they topped out, a couple of months back. Maybe they're making a series of lower lows and lower highs, and they're beginning to roll over on Wednesday the 18th, and that was one of the charts that we discussed that day. Then there's the S&P. Again, big red candle today, out very close to its lows. Yesterday, almost tapping the 50-day and rolling over. So we'll see. Again, looks like going back to the end of July that it's now has topped out, at least for the year, and is making a series of lower lows and lower highs, kind of like gold's been doing for a while. As it rolls over here, the level to watch will be those lows from 2 weeks ago, just north of 4,200. Remember, we were telling you to watch for a dip to 4,200. As you can see, February to June, that was resistance. So we may come down there and take that. You start taking that out, we're talking 4,100 and 4,050. So stonk's not looking happy. For our Thursday conversation this week, we checked in with our old friend John Rubino. John, noted analyst and author, and has been tracking these markets for a couple of decades. So it's always good to get his latest thoughts. not only on the dollar and the bond market, but the precious metals as well. Your Thursday conversations are always completely free. You don't have to be a subscriber or member of TF Metals Report to access those podcasts. If you just go to the TF Metals Report homepage, you will find the audio. You click on the link, and you'll be taken right to the page, and you click the audio player, and you can hear what John had to say. Here is just a small sample of our discussion in 20 or 30 seconds. I encourage you to check out the whole thing, again, on the homepage of tfmetalsreport.com.
It's all kind of coming together to end the fiat currency experiment.
Yep.
And, it's taking longer than it should have. We never should have tried the experiment in the first place. Obviously, if we knew anything about human nature, we'd know it wouldn't work. But here we are. So it might happen next year, might not happen for a while longer, but it's just a matter of time before some big crisis happens that pulls a lot of the governments in, and then we find out they don't have the tools anymore. So at that point it ends and we get the monetary reset, yada, yada, the whole thing that we've been talking about for such a long time.
And on Friday, October the 20th, the precious metals continued to rally, mainly on geopolitical fears, as you can't blame folks for not wanting to be long too many risk assets over the weekend, but wanting to be long things like crude oil, gold, and silver. Silver shot higher earlier today on a little short squeeze when it moved through the 50-day moving average. If you listened to last week's podcast summary, then you heard a theme that we've been discussing at TF Metals Report. The recent trend is that when COMEX silver moves through its 50-day moving average, it has then extended toward its trend line. It's through its 50-day today and may very well make a run toward its 200-day and that trend line that goes all the way back to May the 5th sometime next week. Now, if our prayers are answered and peace and a ceasefire breaks out in the Middle East, well, we probably won't make it to the 200-day, at least not to begin with next week. But all bets are off as we head into the weekend, and all we can encourage you to do is continue to pray for peace and some kind of ceasefire to end the death and the destruction that is coming out of the Middle East. We'll be here next week, though, to watch it, and we'll see where we go from here. In the meantime, thank you for listening to your TF Metals Report podcast highlights. We encourage you to check out TF Metals Report. It's only $15 a month, and it's a great online community. Please go to the homepage, tfmetalsreport.com, and take a look around, and hopefully you'll join us there as we try to navigate through these tumultuous times. Have a great weekend, everyone, and we'll talk to you again next week.